Supply and demand has made me hundreds of thousands of dollars trading, and in today's video, I'm going to show you how to plot these supply and demand levels, what to look for when taking the trade, but also I'm going to be showing you 2 live trades that I have taken using supply and demand, and you're going to see exactly what I was looking for, the reason why I entered the trade, and how I managed the position. So as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so first let's start off with demand. In trading, demand refers to the desire of buyers to purchase at an asset or security at a certain price. Now, these areas of demand are areas of unfilled buy orders, which result from a large move up away from a level. So whenever you think of demand, I want you to think of buyers. A demand area is a support area, a little different from basic support, because essentially what is happening is the market is making a very large move away from a level, which is going to leave unfilled buy orders sitting there in the market. And once price retraces back into the unfilled buy orders, that is where we are looking to get long. So again, demand is our unfilled buy orders. And whenever we think of demand, we want to think about buyers and looking for longs. Now, when plotting our demand areas, the first thing that we want to do is identify a large green candle. So as we can see with this screenshot right here, the very first thing I'm looking for is a large green candle. So right here, we have a very large green candle. Even over here, we have a very large green candle as well. But then once you identify your large green candle, the next thing you want to do is look one candle to the left. Now that candle, that is one candle to the left, must be a small red candle. So if we were to look at this large green candle right here, yes, that meets the large green candle criteria, but if we look one candle to the left, well, it's not red, it doesn't matter. However, with this large green candle right here, if we look one candle to the left, what do we notice? We have a small red candle. Now, what I mean by a small red candle is it's kind of subjective depending on the size of the green candle. I'll show you what I mean when we actually start plotting these supply and demand levels on the chart. But again, in order to identify your demand areas, you need a large green candle and then a small red candle on the left. Now, typically what I do when I am plotting my demand levels is I am going to take the lower wick of that red candle to the high of that red candle. So the upper wick right here. So that will end up being our demand zone. And when price ends up retracing back into the demand zone, the 2 main areas that I'm going to be looking for a bounce is that upper wick on the red candle, but then also the open of the body. So if we look at this example right here, where do we end up bouncing? Right off the beginning of that red candle body. So these are just 2 areas where we are likely going to see price end up bouncing. So if you're taking notes, definitely make sure to mark that down. Now, as far as supply, in trading, supply refers to the total amount of a specific asset available in the market. So when we are thinking of a supply zone, you want to think of unfilled sell orders. Now, how these unfilled sell orders present themselves is they are a result from a large move down in the market away from a level. So again, imagine that you're trying to short a stock and price just very quickly makes a very large and aggressive move down away from where you are looking to enter. What you're likely going to do is wait for price to come back up where you were looking to sell, and then you're going to get into your position. You're not the only person in the world that's thinking about doing that, but also at the same time, a lot of people are just going to leave their orders there and wait for price to come back up, hit that sell zone, and look to short. So whenever you think of supply, what you want to think of are sellers and unfilled sell orders. So this is an area of resistance. Now, when you are plotting your supply zones, the first thing that you want to identify is a large red candle to the downside. So as we can see right here, we have a very large red candle. Over here, we have a very large red candle. But what you have to do then is look one candle to the left, and the candle to the left must be a small green candle in correspondence to the red candle. So as we can see with this large red candle right here, this meets our supply criteria. But then if we look one candle to the left, we have a small green candle. So what we're going to do is we're going to take the high of that green candle wick to the low of that green candle wick, and that is going to become our supply zone. If we look at this large red candle right here, well, if we look one candle to the left, it's not green, so it's not a supply zone. So now what we'll do is we will mark the high and the low of this green candle, and ideally mark the bottom wick and then the open of the green candle. Those are going to be the ideal areas to look for a reject in this supply zone. Now, as far as the time frames that I use when plotting supply and demand zones, is I will always start on the monthly time frame. I will then go to the weekly time frame, the daily, 4 hour, 3 hour, 2 hour, 1 hour, 45 minute, and 30 minute. What you want to keep in mind when plotting your supply and demand zones, the higher the time frame, the more important it's going to be. So if we hit a monthly demand zone, that is going to be a very strong level. If we hit a weekly demand zone, that's going to be a very strong level. What we're likely going to see is a larger reaction out of the higher time frames. So yes, we can have a big move off the 30-minute zone, but the reaction that we get out of a 30-minute demand zone compared to a monthly demand zone is going to be completely different. So let's hop on over to the charts. Let me show you guys how to actually plot these supply and demand levels. And then I will show you 2 live trades that I have taken using supply and demand. All right, so if we're looking at ES on the weekly time frame, we can see that we have a weekly demand zone right here. We have a very large green candle to the upside and a smaller red candle right here. Now, like I said previously, when plotting your demand zones, you want to take the low to the high. However, if the green candle's wick is lower than the red candle's wick, we are actually going to start our demand zone right here. So it's going to start from the bottom of the green candle's wick, and we're going to take it to the high of the red candle wick. Now, what this is going to be is this is going to be a weekly demand zone. So again, this should be a very strong level. Now, ideally, when price retraces into a demand zone, we want to ideally watch the upper wick, but then also the open of the body. Now, as we see, we tried to bounce here, but as soon as we hit the body of that weekly demand, that was the exact bottom before price rallied back up into a new all-time high. And as we see, we came back and tested it again, until we finally broke it. So this weekly demand was a very, very strong level in the overall market, and we bounced out of it many times. So once I'm done plotting my areas on the weekly time frame, I'll then break it down to a daily. Now, as we can see over here, we did end up having a daily supply zone that we ended up going into, rejecting, and then rolling over and setting a new low. So as we can see, we have a pretty large flush to the downside on the daily time frame. We have a smaller green candle right here. So what we're going to do is we're going to mark this whole green candle. So we're going to take the low of the green candle to the high of the green candle, and then we're going to project our rectangle to the right. So now this is a supply zone. As we can see, price retraced back up into it, rejected it, rolled over, and set a new low. Let's break it down to a 4-hour time frame. Okay, so we actually have a really nice 4-hour supply zone way up here. But again, a very large flush down, very small green candle. We will mark the low of the green candle to the high of the green candle, and then project our supply zone to the right. So if the market were to ever trade back up into this level, 100% I would be looking for a reject. Same thing right here, small green candle, large flush to the downside. This is going to be a supply zone. This was a demand zone that I would have watched previously, but we ended up taking it out. So once I'm done on the 4-hour, I'll then break it down to a 3-hour. Looking at the 3-hour time frame, I mean, we have that 3-hour supply way up there. We also had a 3-hour supply right here, another 3-hour supply right here. So because the red candle's wick is higher than the green candle's wick, what you'll do is you will mark the bottom of the green candle to the high of the red candle, and then you're going to project that to the right, and then that is going to become your supply zone. So as you can see, we ended up digging up into that zone, rejected right off the open of the body before price rolled over and continued to go lower. There's another one right there. But once I'm done on the 3-hour, I'll then break it down to a 2-hour. We have a 2-hour supply zone right here that I would watch. We have a 2-hour supply zone all the way up here that I would watch. We have another one right here that I would watch. Then after that, I'll go down to a 1-hour time frame. There's a nice 1-hour supply zone here that I would have watched. But then very recently, we ended up bouncing out of a 45-minute demand. I want to say it was on NQ. So let's pull up NQ real quick. So as we can see right here, we have a small red candle before a very large and aggressive move to the upside. So what we're going to do is we're going to mark the low of this red candle to the high of the red candle, and then we're going to project it to the right. Now this is actually a trade that I ended up taking based off of price coming down into this NQ demand, which you guys are going to see in the recording here in a little bit. But guess what? As soon as we hit that demand, boom, we hit it and pretty much rallied right back up into our opening print. So again, you guys are going to see that exact trade here in a few minutes. But hopefully that helped you guys identify these overall areas and how to draw them. So now let's hop on over to the live trading session so you can see exactly what I look for when price is entering a supply zone or when price is entering a demand zone. All right, so let's start off with this trade that I ended up taking based off of this NQ supply zone up here. So the lower wick was at this 21362.75, and then the opening of the green candle was at 21371. So ideally was looking for my reject right here, and then ideally was looking for a reject right here. All right, I'm gonna give this a go right and give it a go right here. QQQ puts, NQ shorts, whatever you want. This is my supply zone for the day. Would like to see 517.8 for a first trim. We take out like this 21371. That's where I'll exit. Or potentially add. Seems to be more sell orders up here. Yeah, I'm gonna give this an add. Stop above that candle high. Come on. I want that pre-market high as my first trim, 517.8. Come on. There we go. You guys can feel free to trim however you want, especially if you got that second. There we go. I'm trimming down here. Trimming going into this pre-market high. Stop loss break even. There we fucking go. I'm going to take more off down here. Getting close to this 8 EMA. Stop loss remains break even. You guys catch these puts? Probably about to stop out break even, but that was nice. I like that. Oh, baby. Oh, baby. Lose this 8 EMA. Lose this 8 EMA. Please. Multitasking, get a good picture. Just really hope we don't bounce and hit my break even. And then flush. You guys got runners, right? Like if we're going to bounce, this is the area that price is going to bounce. But if we can lose it, that's when we can really start to see downside. All right, I'm going to take one more tiny trim into this 21 EMA just in case we bounce that, but ultimately would like to see VWAP out of this. Again, let's keep the stop loss. Actually, no. Stop loss and profits at this point. It'd be fucking stupid to keep it at break even. Stop loss and profits. Determine where you want to put yours. Mine's going to be about like $25 in profit. Would love to see this VWAP again. This was the area I was waiting for today. We had the confluence as well with book map orders, the supply zone. We started our position at the beginning, hit the open of the body. You guys saw it very quickly. We popped up and started to reject, as well as a lot of passive sell orders. We're at VWAP. Let's see if we can take it out. But yeah, this was like A plus. This is the trade that we wanted today. No disrespect to anybody scalping, but fuck the scalps. One good trade. It's a 50% trade right here. All right. I went ahead and closed the rest of my position. We're at that VWAP. We're bouncing. All right. So that was trade number one off of this supply zone. Very beautiful move to the downside. Started position here, added the rest here, rode this move all the way down into VWAP. Hopefully, you guys were able to see exactly what I am looking for when price is trading up into these supply zones. But now let's hop on over to my demand zone trade. All right, so with this trade, what I ended up taking was SPY calls, but it was based off of NASDAQ coming into this demand zone right here that I was watching from 19329.5 to 19323. ES was also in a demand zone, however, bounced that demand zone the previous day. So this was more so based off of NASDAQ freshly hitting that demand zone. So you're going to hear me talk about taking SPY calls in this trade, but the whole reason why I ended up taking them was one, because ES was retesting that demand zone from the previous day, but also because NASDAQ was now freshly hitting a new area of demand. All right, we did just actually touch it. Yeah, I'm gonna get my ad on SPY calls. Got my ad. We're at the demand. We're holding yesterday's low. I like these lower wicks that we got. We take out this 554.4, I'll get out. But I think if we're going to balance this area, and give me the push. Actually, our risk on these options are relatively tight. We're risking like 25, 30 bucks. So about like a little over 10%. See if we can break this level. Come on. Okay. There we go. There we go. All right. First trim right here. First trim right here on these SPY calls or ES longs, whatever the hell you're in. Stop loss break even. Stop loss break even. Let's see what we get. Want to see us closer to 556.5 for our next trim on SPY. There we go. I'm getting ready for another trim right here. I'm gonna take it right here going into this this 556.10 level. Now let's put our stop loss like 10 bucks in profit on these SPY calls. Let's see if we can continue to get this push. See if we get a new high. Sorry for the first loss, but this one was full size. This was, there we go. Okay. I'm going to take one more tiny, tiny trim going into this 8 EMA VWAP area on this SPY. Beautiful. Okay. If we're going to reject, it's at this 8 EMA VWAP area. So again, let's just keep our stop loss slightly in profits. Let's see if we can get this push. You guys make money on this? Beautiful, beautiful. So started off the day with a small loss. You guys heard me say it, that we were watching that NQ level. Took small loss as soon as we started to break below it. Again, there was probability when we went to that level. We had a large sell-off into one of the key levels. That's ideally what I like to trade, is when we get extended moves into a key level, which was pre-market low. We've traded that hundreds of times. We took it out. We had to stop out. Then after that, we went to the ES and SPY pre-market low, plus the NQ demand that we did not test yesterday. So good trade for the first one. We stopped out. Shit happens, right? We weren't heavy. But then we went down to the next key level that was higher probability and showed signs that it wanted to reverse off of that level. So we started with anticipation of adding to the position, and you guys heard me say that I added more to my position. So I was heavier on these SPY calls, and now we are capturing a beautiful move to the upside. So now with the baby position that I have left, let's see if we can take out this 8 EMA on NQ and ES. I should probably pull up ES since we're trading SPY. But we do have sellers at this VWAP. See if we take it out. I'll target like ES VWAP. So 50, 55, 86. If we get up into that, then, you know, I'll take all my profits and be done. That is how we do it. Now we're in a position of how much money are we going to make today? You guys still holding runners? Please tell me yes. This is my price target right here. I want to see if we break through it. If we start to reject it, then I'll get out. Yeah, I'm going to close it right here. So that's going to wrap up this video on what supply and demand is, how to plot it on your chart, and how I use that exact strategy to identify two beautiful trades, one for a reject off of supply and one for a bounce off of demand. You guys saw the live trades and exactly what I like to look for when price is trading to the zone and how I manage the position. So if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.